Dear viewers, thank you for your serious interest in my lectures on accounting. Accounting is easy and interesting to learn if the student has clear knowledge of the basics before proceeding to advanced lessons. The problem of whoever finds difficulty in learning accounting is a lack of clarity with the basics. The purpose of this series is to give clear and vivid picture of the basics of accounting. Do not fail to attend any lecture. We are with lecture number 5. In this lecture, we are studying about balancing of accounts and trial balance. Thank you for your participation till the end. Balance of an account is the difference between the sums of postings on both the sides of an account. If the sum of debit postings is larger value, the account has debit balance. And if the sum of credit postings is larger value, the account has credit balance. The balance is shown on the side which has smaller sum to make both the totals equal. Below the total, the balance is shown on the side which is larger sum. So that further postings in the account can be done in continuation of that balance. This process is known as balancing of accounts. Any time in the course of accounting period, if the accountant wants to check the accuracy of the postings, he will do balancing of all the ledger accounts. Before balancing the accounts, ledger posting of journal entries should be done up to date. 3 is folio number 1 of ledger book containing bank account and cash account. Both the accounts are balanced on 14th January. Look at bank account. It is a personal account where the bank account is receiver, comes in debit side. Where money goes out of a bank account is giver, postings on credit side. On opening, there is a balance of $12,000 in favor of Sabu. So balance is brought down, is shown in debit side. Further, on January 7, there is a collection from sale of goods, $70,000 that comes to bank account. On the credit side, all transactions where our bank account is giver. $9,000 given for cash box, $8,000 salaries paid by check, $1,200 taken by Sabu for personal use, and $14,500 paid to Mada Interiors. However, the total of postings on credit side is lower sum. The difference is $57,300. So the balance is shown on the credit side by January 14 by balance carried down $57,300, and as a result both the sides total become equal $90,000. Now on January 15 balance is brought down to the debit side $57,300. Wherever in bank account there is balance in favor of customer, the bank account will show debit balance. And wherever his account is overdrawn, the balance will come on the credit side. Balance brought down will come on the credit side. Here there is a balance in favor of Sabu's firm, so bank account shows debit balance. Cash account, it is asset account. Debit what comes in, credit what goes out is a rule. All transactions that comes in debit side are cash that has come in through different postings. On the credit side, there is only one posting, wages paid $300. So, credit side total is shorter. So, balance is shown on credit side by balance carried down $53,700 on January 14. Below the total, the balance is brought down to the debit side on January 15 to balance brought down $53,700. The transactions in both the accounts from January 15 onwards can be posted in continuation of the balance shown. The balance brought down. Slide 4 is ledger book folio number 2, contains purchase account, Joji traders account and returns outwards account. In all the accounts which are balanced on January 14, you can notice that the postings balance carried down and balance brought down are shown in red color for easy recognition. In purchase account, it's an expenditure account. All goods purchased for sale, whether purchased for cash or on credit, comes in the debit side of purchase account. In the credit side, very rarely a few postings like goods taken by owner for personal use. So normally purchase account will have only debit balance. All expenditure accounts will have only debit balance. The shortage, the difference, is shown on credit side. It is 41,500 rupees dollars. It is shown on credit side so that totals on both sides become equal for 2,000. Then the balance brought down on January 15 is shown in debit side, $41,500. Purchase account as debit balance. Coming to Joji traders account, see the purchases of goods on credit that comes on credit side for 2,000 and the return of goods 700 comes in debit side. So the difference is 41,300. Shortage is in debit side. So to balance carry down January 14 comes in debit side. Totals of both sides is 42,000 and below the total balance is brought down on January 15 on credit side. Joji traders account has credit balance. Wherever a personal account has credit balance, that person is a creditor of the firm. Firm owes that much money. That is here, Sabu's firm owes $41,300 to Joji traders. Now returns outwards account. The postings will be just the opposite of that in purchase account because this purchase returns. On January 12, we have returned to Joji traders goods valued $700. Posting comes on credit side. No other posting. So the difference is the total itself, that posting itself. We have to show that in debit side. January 14, look at returns outwards. Debit side, January 14 to balance carried down 700. So the total becomes 700 on both the sides and this balance is brought down on January 15 to credit side. January 15 by balance brought down 700. Returns outwards account has credit balance. Where purchases debit balance, purchase returns account or returns outwards account has credit balance. Slide 5 is folio number 3 of ledger book, contains sales account, roll-ins account and discount allowed account. Sales account is an income of the firm, trading firm, the major income, most major income. Postings comes on credit side. On January 6, buy roll-ins, credit sale 20,200 and buy bank on January 7, $78,000. Postings only on credit side. The total is 98,200. The same is the balance shown in debit side, January 14 to balance carried down 98,200 and below the total it is brought down credit side, January 15 by balance brought down 98,200. Sales account has credit balance. Every income account will have only credit balance. Coming to roll-ins account, it is a personal account of a customer. We sold goods to roll-ins. Posting in debit side January 6 to sales 20,200. He has returned goods 900 that comes on credit side. He has paid $19,000 cash that comes on credit side. We allowed him a discount of 300 that comes on credit side. The account is settled. Where the account is settled, there won't be any balance to bring down. It's over. Next is discount allowed account. In discount allowed account, it's a loss again. Postings in debit side can only come. January 14 to roll-ins 300. Only that. Balance is same amount. January 14 by balance carried down 300. So it is brought down to debit side. January 15 to balance brought down 300. Discount allowed account has debit balance. Slide 6 is folio number 4 of ledger book, contains furniture and fittings account, Mada interiors account and discount received account. Furniture and fittings account is a real account, an asset always opening balance comes in deficit, and further purchase $15,000 from Mada Interiors, it comes on deficit. Total of postings is $23,000. No posting on credit side, so balance is $23,000 itself. It is brought down on January 15 to balance brought down $23,000. Furniture and fittings account has debit balance. Mada Interiors account is a personal account. See, it closes. The purchase from Mada Interiors comes on credit side. Buy furniture and fittings $15,000. Payment done $14,500 in debit side. Then they allowed a discount $500. That comes in deficit, so account closes. Discount allowed account is an income account. Naturally, posting should come on credit side. January 14 by Mada Interiors $500. No other posting. Balance is the same amount. So into balance carried on $500. Below the total is brought down credit side. By balance brought down $500. The account has credit balance. 7 is folio number 5 of ledger book. There is Rajan Company and capital account. Rajan Company, we have no transactions during this period, that is from January 1 to 14. There is an opening balance on credit side, buy balance brought down 15,000. That means Rajan Company were our creditor of the firm owes money to Rajan Company. No posting, so same balance comes to balance carried down 15,000 and below the total is brought down 15,000. By balance brought down 15,000. So Rajan Company is our creditor. Capital account normally will have only credit balance. Look at the postings. Opening balance 46,000 on credit side, by balance brought down from previous period. Then January 12 additional capital brought in 20,000. Total capital is 66,000. So balance is 66,000 itself to balance carried down. And below the total is brought down by balance carried down 66,000. Capital account has credit balance. Is folio number 6 of ledger book. Contains drawings account, salaries account, and wages account. Drawings account represents the drawings done by owner. Postings only in deficit. To purchases say 500. To bank 1,200. Balance is total, that is 1,700. It is on credit side, carried down January 14 by balance carried down 1,700 and is brought down to deficit on January 15 to balance brought down 1,700. The account has debit balance. Salaries account and nominal wages account are nominal accounts. In salaries account, in deficit on posting to bank 8,000, only that posting, so that is balance. January 14 by balance carried down 8,000. It is brought down on January 15 in deficit to balance brought down 8,000. Salaries account has debit balance. Similar in wages. Only one posting in deficit to cash 300. That itself is a balance. January 14 by balance carried down 300 and brought down to deficit on January 15 to balance brought down 300. 9 is folio number 7 of ledger book. Has stock in trade account, Miranda account and loan from Asad Bank account. Stock in trade account is an asset account, but shows only the opening value of stock, opening stock, because all further transactions on goods, purchases, sales, purchase returns, sales returns, they are all shown in different accounts. For no transaction in goods, there is any posting in stock account. It shows only the opening balance of stock. That was 36,000 and so the balance is 36,000 itself. January 14 by balance carried down 36,000 and it is brought down to deficit on January 15 to balance brought down 36,000. It is debit balance. Now Miranda is a personal account. At beginning, there was $22,000 due from Miranda. So balance brought down in deficit to balance brought down 22,000. Only that. During this period, there was no transaction with Miranda. So on closing, that is on January 14, the same balance, by balance brought down 22,000 and is brought down on January 15 to balance brought down 22,000. Miranda is our debtor. He owes money to the firm. Loan from Azad Bank is a liability account, which was there at the beginning. By balance brought down 14,000. Again, in loan from Azad Bank, there is no transaction during this period from January 1 to January 14. So, the same balance is to be brought down. On January 14 deficit to balance carried down 14,000, and it is brought down on credit side January 15 by balance brought down 14,000. We owe 14,000 rupees on this loan account. Slide 10 is folio number 8 of ledger book, the last folio. Contains returns inwards account and rent outstanding account. Returns inwards account or sales returns account contains only one posting in deficit. Two roll-ins 900. So on credit side, January 14 by balance carried down 900 and deficit January 15 to balance brought down 900. Returns inwards account has debit balance. Sales account has credit balance, and so sales returns account should have debit balance. Rent outstanding account shows the balance of rent due for 3 months at the time of inheritance was a liability at the beginning. So on January 1, by balance brought down 9,000. Nothing has happened during this period, so the same balance comes at the end. January 14 to balance carried down 9,000, and on credit side January 15 by balance brought down 9,000. It continues as a liability. Slide number 11 is on trial balance. Let us go to the slide first. Trial balance is a list of balances of ledger accounts as on any specific moment, where debit balance and credit balance are shown separately. Means in trial balance, it's a list of balance of all accounts, but debit balance and credit balance are shown in separate columns. Sums of both debit and credit balances should tally as we are following double entry system. Normally, if there are no arithmetic errors, the total of debit balance and total of credit balances is to tally. If it does not, it is proof of presence of errors of arithmetic nature somewhere in ledger posting process. So, trial balance is a trial of arithmetical accuracy of books of accounts. It does not mean that trial balance is a panacea for all the ills of accounting process, but arithmetical errors can be disclosed through this way, because if there are errors, if there are arithmetic errors in adding, tallying, subtracting, anywhere, carrying down balances, then trial balance will not tally. There are errors, so many errors which cannot be disclosed through the tallying of trial balance, that we will discuss at a further stage. So, trial balance is a trial of arithmetic accuracy of account books. In computerized accounting, trial balance is generated automatically after posting each entry. So, the headache of balancing of all accounts and extracting a trial balance occasionally is not there in computerized accounting. Sabu was asked by his consultant to complete ledger posting and to take balance of all the accounts and prepare trial balance on January 14th. The balancing of accounts we have seen. Now let us look at the trial balance of Sabu's firm as on January 14, 2020. It is slide 2. All accounts having debit balances are shown in left hand side. All accounts having credit balance are shown in right hand side. Accounts which are closed are not shown. In debit side, there are accounts in the names of assets: cash at bank, cash in hand, furniture and fittings, stock in trade at the beginning, due from Miranda 22,000. Now, there is expenditures and losses, purchases, discount allowed, salaries, wages, and then there is drawings in debit side. On credit side, all liabilities, amounts payable, including to suppliers like Joji Traders, to Rajan Company, then loan from Azad Bank, rent outstanding for 3 months. Now, incomes, sales, discount received, then capital account. So, in debit side, please note asset accounts, expenditures and losses, and drawings. On credit side, liability accounts including that to suppliers, incomes and gains, and capital. Here look, the trial balance is tallying. $244,007 on both the sides. Tallying of trial balance is proof of the fact that there is arithmetic accuracy of all that is done in ledger posting. Slide 13 is an assignment. Don't get wonderstruck. This is self-correcting and self-grading. Transactions of Sabu's firm from January 15 to 31st are given. Decide the debit aspect and credit aspect of the transactions. Past journal entries. Post them to ledger accounts only in continuation of balances brought down on January 15. Find the balance of accounts on January 31st after completing the posting. And prepare trial balance. No need of marking ledger folio numbers and journal folio numbers. Thank you for your cooperation. This lecture is coming to an end. Please subscribe and click the bell button for getting all the lectures. Like and share to your friends and relatives who are interested in learning basics of accounting. Thank you once again.